I think there's plenty of room to go, but the market has priced in a lot of good news already. So it might take even better news to get the next leg up. Now, it depends what you're comparing the DAX to. Obviously, European stocks have lagged the US quite a bit, so there is a bit of more room for them to catch up on that front. But I think if we're looking generally at the equity rally, we've already priced in quite a bit of good news.
What we've seen in the trade, this reopening of economies theme, that's very much been picked up by a lot of investors. But when it comes to Wall Street, what we're dealing with now, protests that are swept across the United States, there's no clarity at this stage when those protests could disappear. And already we've seen the impact on major retailers and online distribution channels that they've had to alter some of those strategies. Does that mean we should be seeing this priced into some of the US action this week?
The market has seemed relatively immune to a lot of the bad news recently, and it's likely we're going to see the same thing now. So a lot of these stocks, as you say, have benefited very strongly recently. And if the trend of the last week or 10 days where the rally is finally broadening a bit more continues, then you could see them lagging a little bit. But from all of the headlines across different topics that we've seen, the market has just continued to move ahead.
You've talked a little bit in your note about gradually building positions for coming months. I'm interested, given that you sound quite cautious and wary about the bull that we've experienced here, what those positions would be in and what is it you're attempting to do?
Absolutely. I think the rally has been stronger than expected so far, but at the same time, the background view, the consensus has remained very bearish. Cash levels are still very high. And this view that we were going to have a second leg down, and a view that we expected for quite some time, we still hold to some extent, it just looks like it's losing a little bit of steam. We just think that there are downside risks, and we're choosing to remain rather prudent, especially given how far the markets have moved so far. But the downside is probably a bit more limited given this backdrop. At the same time, as I was saying, this next leg up might also take a bit more support at some point. So we like to think of globally diversified portfolios. We try to build them for the medium term. We maintain a constructive outlook for that medium term. So we'll look at entry points for equities, for those who haven't gotten back in since the end of March. And we don't think there's any hurry to do that, but we'll take the opportunities in the next few months to do so. From a medium-term perspective, I still think U.S. equities will continue to benefit from some of these structural moves that had started even before this crisis. At some point, and maybe even before that, Europe and some of the value and cyclical stocks are likely to play some catch-up. But in the longer term, I'm not sure we're going to see that it's such a big reversal. At the same time, we've kept some positions in the Nordics. Again, it's a little bit more defensive over here, and we've kept a little bit of gold in the portfolio.